In our previous video, we discussed EWA, or Earned Wage Access, a tool for people to use when they need access to cash fast. Although EWA is considered a form of cash advance, there are other cash advance options available. Let's start by understanding what a cash advance is and how it works. A cash advance is a small, short-term loan available through banks, credit cards, lending apps, and other sources. You're borrowing cash, often instantly, but at a cost. There are several types of cash advances that people may use, typically involving borrowing money in different ways. Here are some of the most common types. Earned wage access tools. These cash disbursements must be repaid within a short time frame, typically around the user's payday. Most either charge a small transaction fee or are completely free if offered by your employer, and sometimes third parties. Credit card cash advance. This is essentially a short-term loan taken out against your credit card's available credit limit by using an ATM, visiting a bank, or through other methods like convenience checks. The associated costs are typically higher than those for regular credit card purchases. Payday loan. These are short-term, small-dollar loans that are typically due on the borrower's next payday. They often charge high interest rates and fees, but can be accessed with minimal requirements, like a bank account and proof of income. There are other products that allow you to access needed funds too. However, these do not usually function in the same way as cash advances do. Other common loan products are personal loan. This is an unsecured loan that can be used for a variety of purposes, including substituting for a cash advance. Personal loans may come with lower interest rates compared to payday loans or credit card advances, depending on your credit score. Title loan, a loan where you use your car as collateral. The amount you can borrow depends on the value of the car. If you default on the loan, the lender may repossess your vehicle. Home equity line of credit, HELOC. This is a credit line that uses your home as collateral. It's typically used for larger amounts of money and has lower interest rates than other forms of borrowing, but it carries the risk of losing your home if you default. Why would someone use a cash advance? Someone might use a cash advance when they need quick access to cash, especially in situations where they can't use a credit card or their score isn't strong enough to be approved for a personal loan. Although convenient, some cash advances can be costly. Impact on your credit score. Now let's talk about credit scores. Some forms of cash advances don't directly hurt or impact your credit just for using them, but some can affect it indirectly. For example, if you choose a credit card cash advance, it may push your credit utilization high. That may lower your score. And if you struggle to pay it back on time, that's a hit to your payment history, which makes up 35% of your FICO credit score. Managing cash advances responsibly. If you have to take a cash advance, here are some tips to help you navigate cash advances responsibly. Borrow only what you need. Pay it off ASAP to reduce interest costs if you took a credit card cash advance. Avoid turning it into a habit. Compare alternatives first. Assess if and how it may impact your credit. So, while a cash advance can be a financial lifeline in a pinch, it's important to know what you're getting into. It may help to think of it as a last resort, not a go-to plan. Thanks so much for watching. Don't forget to like and subscribe, and go to self.inc for more tips.